Good morning, good afternoon, and good evening, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our weekly series of trading webinar in which we discuss several different topics. So in these master series, we discuss assets like indices, Bitcoin, and stocks. So first of all, if you guys can hear me very well, and if you guys can also see my screen, please do give me a check by saying yes or no. Okay, fantastic. I see a lot of familiar names are here already. As always, that is great to see, because that is exactly what we do over here. And especially, in the last webinar, not about the Bitcoin or the US. I think the last webinar was about US NFP that we did. No, I think the last webinar we did was about Bitcoin. So we discussed a few different opportunities there, and the one before that we did discuss about some opportunities in the stock indices as well. So that is really what we're going to build on today. And on top of that, guys, what is quite important is that on a daily basis we do put videos out on our YouTube channel. So they are very, very helpful. They could be very helpful for you, because especially the recent sell-off and the recovery and the current sell-off again, all of that was telegraphed quite well in those videos. So if you have seen any of those videos, you would have seen that how those opportunities were in the market and how could you really sort of take advantage of that. But as always, before we do anything else, it is important for me to go through this disclaimer. Any questions in relation to disclaimer, please feel free to ask me any questions. Now, as I've mentioned to you guys earlier, that the contact details for us is on Twitter. You can contact us at AvaTrade, and the webinar recording and all other recordings are available on our YouTube channel as AvaTrade. So if you do have any questions, feel free to ask us over there. So we'll be very glad to do that. Now, something that I kind of wanted to share with you guys is AvaTrade's unique technology. AvaProtect is a revolutionary one-click risk management tool available on the AvaTrade and WebTrader and AvaTrade Go app. So with AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the losses directly into your trading account. The only cost is the AvaProtect fee itself. Now, first of all, folks, wherever you guys are based, tell me how the weather is, because I am based in London and it is extremely, extremely hot in London today, or shall we say for the last few days. The weather over here is touching 33 Celsius, and the room that I am sitting right now, the air conditioning is out for the last few days. It is very, very hot. Okay, Wigan. So David is based in Wigan. Okay, and Matthew is based in Russia. Leonard is based in Liverpool. He goes, it's very, very hot there as well. South Wales, Keane is there, 30 degrees. And Amutha is based in Singapore. Amutha, it must be very late for you at the middle of the night right now in Singapore, and always hot, yes, for sure. It is always hot over there for sure. I mean, I love Singapore. I've been there a few times. And Matthew is from South Africa, and we know the weather isn't that pleasant in South Africa as well. So I suppose if all of us who are based in the UK, we are complaining about 30 to 33 degrees, I think that is nothing if we compare to the locations where other people are really based here. Ronan is in Ireland, East Coast. Love the East Coast part of Ireland. 24 degrees over there. 24 is good. Or even Akininian, if I'm pronouncing your name correctly, based in Lagos, Nigeria. 28 degrees over there. Okay. So overall, we can say that the weather is pretty Pretty warm everywhere, apart from Ronan, where you are based, or Matthew in Russia, right? Where it's always cold over there. But look, glad to see all you guys over here as always. Okay, so what we are really going to do, the agenda is that why we'll be asking the few study questions. So why do you want to trade indices? The inverse of indices, we'll be also looking at that as well, such as the volatility index and stuff like that. The fund flow, we will look at the which particular index is really seeing more of a fund flow, where the money is really coming out or coming in. So that sort of information, that is also we'll be discussing as well, and defining levels and defining a strategy on the back of that. Now, so just give me a little bit more, let me just familiarize a little bit more with the people who are in this room with us today. So could you give me like a little bit indication for those guys who are really new to this trading, who don't know what the S&P 500 index is? Is there anyone over here who doesn't know what the S&P 500 index is, or the US 500, or the Dow Jones index, or the US 30, or the tech index? Anyone knows? Like, I mean, feel free, because you know, like when I started, I was never shy of saying these three questions, because if I don't know, I don't know. I'll just say it, I don't know. So because, okay, there you go. Okay, that's really good to hear that some people are actually now mentioning that they don't know what it is exactly. So we'll discuss that and we'll take it right from there, because I think that could be a really good start. Just if you're wondering what chart is right in front of you, this is the gold chart. We did the analysis in the morning and we kind of mentioned this area of support. Now the prices are retracing. We did talk about the prices, the possibility of prices moving lower. And then this is an area of support that we kind of mentioned in our analysis, and then afterwards the next important of area is right here, 1749 to 1761. So that would be the next area of support that we will be very much focused on. Right, okay, so S&P 500 index, which is right in front of you, represents the top 500 companies in the United States, and they are combined in one package, in one index, which is in an index and known as the S&P 500 index. So when you buy this particular index, or the US 500 as it is called on our platform, then basically what you are really doing over there is you are buying the full 500 companies over in America. So that these are your S&P 500 companies. So buying this particular index, you get an exposure to all the 500 indices in the United States. Now, similarly, the Dow Jones 30, or the US 30, or the Dow Jones Industrial Average, there's so many different names for them. It represents the top 30 companies over in the United States, the industrial companies. That's why it is called Dow Jones Industrial Average. And by buying Dow Jones Industrial Average, you know, you get an exposure to not one company, but you get an exposure to all the companies, as you can see over here. That is your Dow Jones 30, right over here. So, you know, when you do that, you own all the, I mean, you have an exposure to all the 30 top companies over in the United States. Now, similarly, for the Tech NASDAQ 100 or US Tech 100, which is known as US Tech 100 on our platform, you know, when you buy this particular index, you know, you have an exposure to the top 100 tech companies over in the United States, as you can see over here. So whenever you buy or sell this particular index, you know, you get an exposure to all the companies which are very, very important over in the United States. So that sort of, you know, gives us a good summary in relation to what is an index. Now, the reason that we trade an index is because when we have limited funds, or when we wanted to day trade, index really provides that, you know, sort of a good good path to do that, if I would say, because then, you know, for $1,000 or $5,000, obviously you can't buy all the top 500 stocks or top 100 companies for when it comes to NASDAQ. but with a $1,000 or $5,000, you can certainly have an exposure to all the top 100 companies. And the reason they are pretty good on a daily basis for day trading is because there's a plenty of volatility on a daily basis. For example, for the Dow Jones Industrial Average, the daily volatility is about 800. As you can see, there was a massive over here. So they occur very, very frequently in the market. So from day trading perspective, one can start in the morning and call it a day with a good, decent profit in the bag at the end of the day. Hopefully, that is the strategy I hope that you guys are using. If you are not, then hopefully at the end of this particular webinar, you will have certain strategies to really look at and implement them in your own portfolios. Now, before we do anything else, it is important for me to set out the groundwork for all the three important indices. So what is the difference between indices and futures? So indices are actually the cash index. So that will open 2:30 p.m. London time. So that's the actual index, and it only trades for certain hours. So you can't trade out of the market hours. So when the stock market opens, the index will start trading, and when the stock market will close, the index will stop trading as well. But with futures, you can trade them pretty much around the clock, with the exception of a few hours when you can't trade, and that's very, very limited. Apart from that, you could have a position, let's say that at night time when the market is closed, a big news comes out in terms of a stock market. If you have an access to futures, which we have right in front, you can actually take advantage of that futures right there, right at that time, rather than waiting for the index to open next day. And then when it will open, it'll open up with a huge gap to the upside or to the downside, depending on the news or what sort of a news is really there. So Davia, I hope that kind of answers your question. So going back to the our analysis, so we have three different moving averages. The concept over here is really very, very basic. As long as the price continues to trade above the moving averages as it is, we have a very clear upward trend. But if the price begins to trade below these moving averages, like it was doing it, right, let me just point that out on the chart, like it was doing right over here, we can say that the price is in a downward trend. But over here, the first sort of a crossover happened, and after that, we saw this massive momentum trade to the upside, which took the prices to a completely different price level. So that is the point of a price action that we need to pay more attention to in relation to these particular price action, in relation to these three important moving averages. And every time the price comes close to its moving average, it usually represents an opportunity. We could, just like over here, it came close to its 100-day simple moving average, and then it went back up, and then it came close towards its 200-day simple moving average. And ever since the price hasn't touched its 200-day simple moving average, we saw this massive rally. So basically, these moving averages, they are also considered as an area of opportunity. Now, more recently, if we look at the US Dow Jones Industrial Average, what we really see and what we discussed in our particular videos was that the price has formed a double top, the first top being over here, the other top being over here, and we discussed there's a probability for the price to fall, and that is what exactly happened over here. Prices did fall after forming that bearish pattern, but now, as of today, the opportunity really is as follows. If you want to take this particular trade, you can put your stop losses possibility with the below of this 50-day simple moving average, and then really target this particular price action point, the previous resistance. So I would not take the full position out at this particular time, but even though my risk is only this much and my reward is literally twice that much that what I am targeting, but I will take small position out. So if I buy 4 contracts as of today, I'll take 1 contract out and I will keep 1 contract in, and then let this trade continue to ride to the upside, further upside. However, if the price action reverses and the price fails to stay above this 50-day simple moving average, the moment the price crosses below the 50-day simple moving average, I will put stop loss on top of today's high and let this price continue to move towards at least this particular area of support, because it is highly unlikely for the prices to change their direction from the 200-day simple moving average. Why? If that is the question, then the answer is very simple, because very recently the price has visited these 2 particular moving averages, and the longer or the more times the price spends or touches any of the moving averages, the greater the chances are for a correction, and that correction means the price is moving further to the downside. Now, of course, after that, we need to put on our next boundary level, the next support zone level. So the next support in terms of US 30 is really going to be over here. So if the price, it comes into this area of support, as we mentioned over here, I'll take half of the position and I'll keep the other half to let the other half go right over here. So I'll be risking this much under the current circumstances, and I will be gaining this particular one. So this is at least 3 to 4 times of the size of over here, because if that is where the price is trading, then this is your risk right over here. Then we are really talking about this massive, massive opportunity in terms of the Dow Jones Industrial Moving Average to the downside. Does that make sense to you guys? Any questions on that? What time frame do you place your trade in? That's a very good question. I would usually place my trades on the daily time frame. I don't really usually do day trading time too much, but whenever I do day trading, I look at 4-hour time frame and I look at 30-minute time frame. So 4-hour time frame, really, I would use it to like see where the trend is really going. 30-minute time frame, I will take the trade, but I will take the trade in the direction of the 4-hour time frame. So on the 4-hour time frame, we can clearly tell that the price is very much in a consolidation zone. If we say it for the last few days or so, because this is where the price is very much trading in this zone, and anywhere around here is your sell, anywhere around over here is your buy, and then we have within those zones, like this is buy 2, this is your zone number 2, and then of course this could be the area. So if you are going to take a breakout trade as the price breaks above that, then you wanted to let's actually discuss that in a little bit more detail, because I think we got a little bit carried away with the question which was asked. So the opportunity really is that what do we do with the price action right now? I think with the price action, we try to move to the upside, despite the fact, just like the other price action over here, we also have seen that double top forming as well, the first top being over here, the other top being over here. But it seems like that the fact that the price has pushed above the 50-day simple moving average, the fact is that it is going to cross above. Sorry, that is not right. That's not very great, is it? The fact that the price has crossed below the 50-day simple moving average, this time it is very likely to cross above this particular price action quite easily. So that is what exactly we are talking about. How do I determine my stop loss level? So I try to keep my stop losses as follows. So if I am risking 1, I will gain 2. If I am risking 2, I will target for 4. If I am risking for 4, I will target for 8. If I am risking 8, then I will target for 16. So I will always look for double the risk to reward ratio really under the current circumstances. What I would do really is to look at where the opportunity is. We know the opportunity is to the upside. So the closest risk to reward ratio for this particular one is going to be the 50-day simple moving average. So this over here is our risk. But how much we wanted to gain? We wanted to gain from here to all the way to here. So that's already 2 to 1. But we are not going to stop over here. If we take 3 contracts, we will take 1 contract out over here. We will still keep 2 contracts in and then let this price continue to move to the upside. Does that make sense to you guys? So Matthew, you've asked me that stop loss question. So I would really push the stop loss below this 50-day simple moving average, just a tick lower. And then if the price is going to move to the downside under the current circumstances, I would put my stop loss just under a tick or two above the previous candle's low. Under these circumstances, it becomes this over here. All right. So where are the opportunities in the market? So with respect to the Dow Jones Industrial Average, the opportunity really is to go higher and then possibility a break of this particular element and then moving more to the upside. Now, with respect to the S&P 500 index, the opportunity is again to the upside. The stop loss is less attractive because there's a bit of a distance over here between the price and the stop loss. And if you look at the target is really going to be coming over here. So we really do not have a great target in place. So what we want to do, we want to wait for the S&P 500 index to let it come into an area where we would like it to be. And once the price will come over there, and then we will trade. Now, as for the Dow Jones Industrial Average, we have the double top form. The prices are more likely to move to the upside. However, recent break of the 50-day simple moving average is a sign of an encouragement. It's a sign of a healthy response in terms of a markets, in terms of the traders, and it is likely that we may see more momentum to the upside. Now, when it comes to the US Tech 100 index, the S&P 5, the Nasdaq index, what we really see is a battle between the 100 and the 50-day simple moving average. This particular situation is very, very similar to what happened to the Dow Jones over here. We know there was a battle. We know one battle was lost, and then the next day they came back strong. So a similar thing can really happen over here as well. Right now, it is safe to say that on the 4-hour time frame, bears are losing control of the price. Their price action is certainly under a lot of pressure. If we switch the time frame and we go to the daily time frame, we could see that the prices can retrace towards its 50-day simple moving average, which is in line with this particular area of support. Now, does that make any sense to you guys? Matthew, are you asking about market order? About what? Could you refine your question a little bit more? So what do you take, or how do you take control out? How do you take a control out, Leonardo? It's just like a preset orders. So you just place an order, for example, for a price to break above, let me just bring my mouse back to, for a price to break above this particular high. So you will place an alert that you wanted to trade only and only if the price breaks above that. So that's how you will place it. Those pending orders for market orders, you just click, like you just click buy and sell straight away. Trade on US 30. What does that mean, trade on US 30? How do you determine stop loss level? Okay, we've already answered that question. So that's already in line with what we kind of discussed. So overall, in terms of the fundamentals, just to quickly cover some of the fundamentals as well, fundamentals is all about one thing and one thing only, and that is the delta variant, how that delta variant is very much influencing the markets and where that is really going to take everything in relation to markets. So that is what traders and investors are focused on. Right now, the increase in delta cases has become quite a lot of troublesome for many investors, and then they believe that the market can actually reduce its exposure, market can actually fall on back of that. So that really triggered that. But I think the vaccination thing is a very, very important, which we all should remember. And the current opportunities, the current sell-off is nothing but an opportunity really in terms of a market. So I'm really sort of not worried too much. I'm just trying to find this VIX index as well, the VXXB over here for us, so that I can show you the reverse of this particular index as well. So let me just see. It should say show all. It should show me all the assets over here. So let's go to the down. Maybe over here we should see the VXXB. If you guys can see VXXB, it is there. So let me bring out a new chart first of all. So if you wanted to, this is a very good exercise for you to how to play with the MT4. So I clicked over here. I clicked on any of the charts over here. And now what I'm going to do is I'm going to put VXXB on that, which is your VIX index. Okay. So you can see VXXB over here. Now I'm going to change the background and then the layout to keep uniform with everything else. I like this one as white. I like the foreground in black. And you can keep the grid line. Bar up should be green. Bar down should be red. And bull candle should be green. And the bear candle should be red, just for us to really kind of see that distinction in terms of that. And then voila, this is what we have. So what we're really looking at in terms of a VIX index is that more recently we did see this massive bounce to the upside when the prices dropped below the 10 in April this year. But then after that, after this massive drop, the prices bounced back up. Now prices are once again moving to the downside. As you can see, the price is really moving to the downside. One important thing when it comes to really these ones is that the volatility index kind of trades on the opposite side. So if the S&P 500 index is trading to the upside, as you can see over here or anything, the VIX volatility index will trade to the downside. So right now the VIX index is really trying to break above its upward trend line, and that is certainly positive from a volatility perspective. And the other important thing that we need to pay attention to is that if we draw a line over here, you can see that again the VIX index did try yesterday to move to the upside. Move to the upside despite the positive rally, and that means that maybe just that momentum isn't going to last. However, today's price action is telling us that yesterday's buying was very smart, and the markets can really continue to move to the upside. If this is a fear index interest, if that's what you're asking, yes, it is a fear index. All right, folks, that's all for today. Thank you so much, and make sure you subscribe to our channel. The recording of this one will be available on our channel, and I hope you guys enjoyed our today's webinar.